Yes, dear ladies and gentlemen, Angelo, thank you very much for inviting me to this conference and also to this really nice and great region, and also his team. Thank you very much. And also Mr. Barisani for giving an introduction to my presentation. The topic is European and international dairy market situation, how to deal with the price volatility. And it's really a new situation. I want to try to give you some ideas of this new situation. As you already said, I'm from the University of Applied Science in Kiel. That's one of my jobs. And the other part is being director of the IFE Information and Research Center of Food Business in Kiel. And it's also my colleague, he's staying here in this conference, Erhard Richards. He is doing most of the international forecasts on dairy markets, and he also gives some slides into this presentation. The latest forecast from him you will find on the CLAL webpage already. Yes, just to start with our institute, it's an institute which has four directions. One is we are doing a lot of market analysis. We are presenting market informations, and we are presenting also consultancy work for dairy companies, and we are also giving seminars on dairy markets, especially on the last 2.5 years on training on dairy risk management. One of our latest research projects was for EDA, European Dairy Association, and Alexander Anton is already staying in this conference. And it was a study, it's finished in September, and we presented the results at the ADA conference in Cologne, and copies also presented at the EU conference on milk markets in Brussels in last September. Sorry, it's September 2013, not 14. Just to go back to this analysis, the main issue here was just to find out what is the connection between the world market prices and the EU dairy market prices, and what are the results out of it. One of our main tasks at the IFE is delivering milk indices for the milk markets that are helpful for forecast and also set up of reference values in milk contracts, especially in the future after 2015, after abolishment of the milk quota system in the European Union. So we have one what we call milk value. It's on the right-hand side. It's this one. It's a milk value from IFE, from Kiel, and called also Kieler Rohstoffwert, and it's based simply on skimmed powder and butter. And our comparative advantage is that we have a lot of cost models of processing milk products, and so we calculate based on the prices of skimmed milk powder and butter. We are calculating the intrinsic value of milk in these products. And that's why we call it milk value and not milk price, because it's calculated. It's not the real price. It's a calculated value based on prices of skimmed milk powder and butter. And the same we are doing on a European level, what we call IFE Milk Value Europe, based on skimmed milk powder from Netherlands, France, and Germany. And this could also help you for observing cash markets, and also help you to find out what is the future market value of the milk, for example, in October, based on future prices at the European exchange in Frankfurt, the Eurex. further on, we have what we call spot market value based on skim milk concentrate and also cream. And a pretty new one is built for what we call for overall milk. It's an overall milk value, and it's based on lots of products, for example, skim milk powder, butter, but also whey powder, cheese, fresh milk, UHT milk, buttermilk powder, and so on. This gives you a good idea about the milk price level for the next months, in this case for Germany. Yes, what happened in the milk production side, on the milk production side in Europe? The milk deliveries are shown here. And the 2014 line is showing here, and also the forecast for the next couple of months. And an increase at the moment that's based on Erhard's calculations in our institute, an increase of 4 million tons in this year seems to be very realistic from our point of view. That's plus 3%. So we have a decrease of the plus we had in the first months in this year, and we are going in a direction like roughly plus 3% in this year in the European Union. Yes, indeed, this is the actual EU minimum price level at the moment. That's not the intervention price anymore. It's a raw milk value from the world, on the world market level. So, as you know that from the past, in 2003, we changed the EU milk market policy. We reduced intervention prices, and in former times, the intervention price was the minimum price in Europe. But nowadays, it's not anymore the intervention price. The minimum price in the European Union is a world market price. And that means that due to a higher production at the moment, not only in the European Union, but also worldwide, we have a decrease on the world market price level, and we also have a decrease on the European market level. For instance, it's the indicator here in this case. It's the milk price for Germany, this is the change in milk production of important countries. I think from the demand side, we will hear from other presenters today, from China and also from other countries. So I'm focusing here on, or concentrate on the production side. And it's interesting what you see here. It's a change we had in the last, it's a monthly change in 1 million tons in the last year. From July 2012 to July 2013, so there was a 1-year period where we have a reduction in changes in milk production based on Australia, New Zealand, Belarus, and United States milk production, and the European Union milk production. And on the this is the change in 1 million tons per month, and this is the total 1 million tons per month of these states. And it's also interesting from this picture that we have an increase of the milk production changes from this countries, in these countries, and this means that we have a pressure on the world market again, but most of this pressure is absorbed by the increased consumption. So we have, from our point of view, we have still a relatively stable situation, and that also means that we have a lower price elasticity on the demand side. Give you an example from the cheese markets. These are the EU exports of cheese. in tons in 2013. And from this picture, you might understand that the Russian cheese imports and also Russian cheese restrictions on imports will have a high impact on our milk markets in the European Union and also on our milk prices. So, and this is what I meant a little bit later with political risks we also have in the markets. So we have to deal with political risks in the milk markets in the future too. What you see here in this picture is our restricted cheese exports and a buildup of storage we had at the moment has an impact on world market prices and also on EU cheese prices. So the latest quotations from Wednesday was that the Gouda Edamer price quotations they went down further. So the cheese market is still under pressure. This is the EU whole milk powder prices, whole milk powder prices from the world market and also from the EU markets. And there we also have a situation where we have a decrease of the whole milk powder prices, and we came from a very high level, as you see in this picture. And if you look to the butter market and butter prices from the EU markets compared to the world market price, then it's interesting to see that we have a high convergency or the convergency trend we have between world market and EU butter market prices. But we also have a trend to lower prices, and our prices in European Union are still above world market prices, but we became more and more competitive on the butter market, and that's what we can discuss later on. On the skim milk side, we are more competitive on the world market, and this is also due to the very high convergency of the prices, world market and EU milk prices, EU milk market prices of skim milk powder. And as I said already, you know, the intervention price is only a minimum price for special situations like 2009. In the first half year of 2009, we tested our minimum price level or the intervention price level, but in all the other situations, the minimum price level of the European prices were the world market prices. And we also have some special situations. For example, this is an example of the spread between the high spread between skim milk prices in 2014 compared to former times. And you see that it's just an index. 2011 January was set to 100. And this means that, and then you compare these both lines, and then you can compare them directly. And the skim milk powder price went down in the last months, but at not a sharp level. And the skim milk concentrate spot markets fell down sharply. And but the latest pictures at the moment from this week and also from last week was that the skim milk concentrate already is going up, also sharply going up. Why this situation? What's the determination of this situation? It's only based on the capacity problems we have on the skim milk powder market, and this situation will change in the next couple of months. And then we will go closer again between both developments. Yes, and now coming to the new era of European milk prices since 2006, as I already said, the new thing is that we have these higher fluctuations here in the price level. If you compare that with all the other price levels we had from the beginning of the 1968 when we started with the milk market regulations in European markets, this is a pretty new situation where we have to deal with. And that is it's determined based on two effects. One effect is that we decided to reduce our intervention price level. That's the one effect. So that's why we opened the spread and the range where the prices can fluctuate in the European Union. And the second one is that the world market prices went up. So we have these both effects. One is a market price effect, and the other one is a political intervention price effect. So, and these both effects increase our volatility on the European farm gate milk prices. I only want to underpin that we will have a growing milk demand based on the development and the forecast of the world population, but not in Europe. Yes, in Europe is stagnation or lower milk demand in the future. So we have to go we have to export, especially to, as you see it here, especially to emerging markets, because the highest demand in the future will be on the emerging markets, so we have to orient it to these markets. We also have to deal with a new risk. That's a currency risk. That's US dollar euro risk. We calculate this risk just to show you the effect. If you have a devaluation of the euro, this increases the European milk prices, and we had a good example in 2010. If you focus on from January 2010 to June 2010, we had a minus 25 US dollar cent devaluation of the euro, and this means in calculation that's plus 7 cent raw milk value in Europe. Yeah. And the same holds for the other situation. If you have a revaluation of the euro, then you have a decrease of the milk price. So you have to take that into account, and because our new export markets or our export markets for the futures are mostly markets in US dollar regions. So we have to take more and more into account the US dollar euro risk. The proportion of EU milk production exported out of the EU will increase in the future. We have a significant trend, an increasing proportion, and this is, these are some really conservative forecasts for the situation, and I only want to make clear that we already benefited from the connection to the world market. We have benefited from the world market price trends from January 2006 until now. We have an increase of world market value by 1 cent per kilogram of milk, and this increased the EU milk value by 0.78 cent per kilogram on average. So that's why we get profits from the world market developments. And there's a very strong positive correlations of 0.81 to 0.9 between EU milk prices and world market price developments. Yes, and the milk price volatility will increase in the future. As I already said, EU will increase the market shares on global dairy markets, and the connection to global markets increase, and the new price risks for our dairy markets in the European Union is due to international climate and weather risks, and also new price risk are due to currency risks, as I showed you by the US dollar euro currency, and the new risk distribution in the European dairy chain occurs, and EU dairy farmers try to reduce their risk-taking position, because at the moment mostly the farmers are the risk takers of the whole dairy chain, and they have problems with this sort of situation, especially if they are growing farmers, and growing farmers have normally more liquidity problems. If you compare our price risk on skim milk powder and butter, for example, on the world market level to other products like wheat, coffee, and so on, then you observe from this slide, you observe a higher price risk based on a variation coefficient which we calculated from 2008 to April 2014. We have a higher price risk on skim milk powder and butter than wheat, coffee, and cocoa. So, in all of these markets, normally we have future markets, or we are dealing with or we are handling these risks with risk management strategies, independently if you are a producer or if you are a processor or end user. We have a lot of dairy risk management instruments, dairy future markets in Europe and in the United States. For example, this is the Eurex butter future. This is the Eurex. The Eurex is the European exchange, commodity exchange in Frankfurt. That's a butter future. That's a skim milk powder future there. And this is from the Euronext in Paris, the skim milk powder future. And we have this, just for comparison, the CME class 3 milk contracts. It's based on a cheese milk contract. And the red line is the price of the contract, and the blue bars are the volume of the contracts. And what you get from this picture is that we have very high volumes here, for example, on CME class 3 contracts. So that's roughly 2,000, sometimes more, sometimes less, 2,000 contracts per day. And if you compare that to what we have in Europe at the moment, that's less. So we are on roughly sometimes to 60 or the best times in 80. So we need more liquidity on the markets anyhow. I'm slipping through this slide because it's just give you an idea about the underlying of the European butter future that's based on French, Dutch, and German quotations. On butter, for example, the same holds for the skim milk powder side, just to give you an idea about the underlying of that. This is very important because the big question is if you want to hedge, if you want to hedge, then you have always the question, how does the physical quotations is relating to financial hedge instruments? And this slide gives you an overview that was presented 2 weeks ago on a seminar in Amsterdam by Mondelez. This is a comparison between the Eurex futures and the quotations, and we have a very high correlation on that. And this means that the forward curve for the future gives you also a very good idea about the development in the future due to the strong correlation we observe on both, on butter and skim milk powder at the moment. So coming to my results, last 2 slides. The international and EU milk production is coming back to former production growth after years of reduced growth. We have adjustments lead to better supply and demand balances worldwide and allow to build up stocks and reduces volatility. So this is an aspect which reduces volatility. And dairy commodity prices will be back to the path of what we call moderate price developments. And dairy prices will move below the level of second half year in 2030, but still above. We are at a level of 35 cents per liter. For example, at the moment, if you look to the forward curve at the Eurex for October 2014, you can lock in a price of roughly 38.3 cents So that's above 35, and 35 is a level that is based on calculations of the world market prices from skim milk powder and butter, FOB, free on board prices, Rotterdam. EU prices will be closer to the international level, as I said, and EU will increase the shares in the international markets, and our higher export shares will increase our volatility of milk prices due to a lot of risks, exchange risk, political risks, and also economic risk. Hence, for us, there's a strong need for dairy risk management strategies in European milk supply chain. And at the moment, in general, dairy companies in Europe hedge the milk price risk through to the farmer, and growing dairy farms facing more liquidity restrictions as in the past, and are interested in, or should be interested in, lowering the market price risk. And a market-oriented risk management strategy, one of the market-oriented risk management strategy is hedging milk prices via dairy future markets. Thank you very much for your attention.
Grazie.